Okay, so as we start the session right now ongoing, we do have a promotion for DLC until 30th of April, where if you do trade in the SocGen DLCs, right? So two trades, two buy trades, you'll be actually entitled for this cash credit of $88. So you must be clients that have not yet traded in DLC before, and you do try out using DLC if you listen to this session, the webinar, interested to try out, and you do trade two buy trades within a time period of the promotion, you do enjoy this promotion of $88 cash credit as well. Okay, so this is content on the market outlook. Okay, so basically, I think everyone is aware of the current China market isn't doing as well compared to the overall market in US or in some places in even Japan. Right, so whereas you see in a Shanghai Composite Index, the SHCOM, right, as of yesterday, like yesterday was today, I'm not sure how it will end, but year to date is around down 1.36%. All right, and last year it was down 3.7%. So compared to the US major up in 2023, China is lagging behind. All right. However, if you see in this 1 month time, it actually rose 6.53. So there is a slight rebound in a 1 month period. Means from end of Jan to currently end of Feb, right? Also, one of the portions is maybe because hit a low and then there's a rebound, and then also the fact that of the Chinese New Year period, there might be some optimism coming in regarding after the Chinese New Year period in the Dragon Year. And actually, you can see that most of the top performers in the composite actually is majority in the semiconductor or tech industry for the Shanghai Composite Index as well. Then you have the Hang Seng Index is down 1.51% year to date, also very similar to the Shanghai Index, right? It's down even more in a whole year of 2023, 13.8% down last year. However, same thing, in this 1 month time, it has been rebounded and up 6.92% for a 1 month performance. So the top performance is also similar. The tech companies, automakers, or EV, and technically for Hang Seng itself, currently is 16,600 plus, that region, right? So the resistance target to hit will be 17,100. I think it did touch this level or slightly broke the level earlier this week or last week, right? And then the next target that I'm looking at is 17,500. So if you do break this resistance target, then we can say for sure or more convincingly that there is a real recovery trend coming back to play for the China or the at least for the Hong Kong market. But right now, Hong Kong market is still generally in a general downtrend from last year to date. So I think even before last year, I think even from 2022 onwards, it's already on a general downtrend. So I think the Hang Seng Index do have quite a lot to catch up. And then we'll discuss more about it later, why there's such a discrepancy in terms of performance for Hong Kong compared to the US market. Then other than the Hang Seng Index, we also have the Hang Seng Tech Index, which is also very popular to trade, where this index is majority focused on the tech companies listed in Hong Kong itself. All right. So you can see that as of 27, which is yesterday, it's down 6.94% year to date, much more than the Hong Kong index, Hang Seng Index, and the Shanghai Index. And it's down 8.8% for the whole of last year. Right. However, for 1 month itself, it's actually up 13.05%. So basically, it shows that it dropped a lot for year to date. All right, halfway through last month, it was even down further, but there is already a very strong rebound coming into play after the Chinese New Year period until now. Right, so the resistance will be 3540, 3660, and 3800. That's the targets that I have for the index itself. So if there is a real recovery trend and it does breaches this level, then it might be more convincing for an uptrend to anticipate for. Okay, so in general for Hong Kong and Greater China market, some of the headwinds to discuss or to understand first, right, is that there is always the ongoing geopolitical tensions, all right? So right now, not only does China have with, let's say, US, but also with India, with other countries in the region, right, due to the South China Sea issues or due to the tech war or other parts of other contentious issues that they might have, right? So the US-China tension actually intensified not only through Taiwan, but also due to the potential tech restrictions that they might have on each other. So with US trying to prevent China from growing too fast or to restrict the amount of tech that is flowing into China from the US or from the world as a whole. right? Then also next, we do have elections coming up for this year, which this will also lead to certain impact to China, where China does not really have the election, but the elections around the world will actually impact on the leaders that's elected, will actually impact on the relations or how they carry out diplomatic ties with China. All right, some of the, maybe for example, the US elections, how they actually will proceed with the US-China relations will actually largely depend on the result of the election as well. Right, then there's also the post-COVID recovery for China that was anticipated last year, but didn't really materialize. And you see that the China market didn't do well last year. And this year, similarly, the whole overall recovery trend is there, but it's still very bumpy. There's no real very clear indicative or economical data to support that China is very strongly recovering from the post-COVID period, other than the traveling numbers from this Chinese New Year period itself. But in general, they still have other issues like deflation fears. So the whole and then you also have the China developer debt issues, which I think a lot of investors are aware of. The China developers, a lot of them are in high debt, not able to actually cover the potential bonds, so they're defaulting, or there might be other loans issue, which will spill over also to this finance sector if the banks are impacted. And also there's a hidden debt of the population, not only in Hong Kong but in China as a whole, where there's a lot of different social media companies or tech companies having credit lent out to the public itself, or the hidden debt due to the different provincial different projects or even different loans that they are taking. Okay, so in general, you can see there's a lot of headwinds in China and in Hong Kong in terms of impacting the potential to grow. But in general, due to the whole overall current level of the stock market in terms of valuation standpoint, is so-called undervalued compared to the US market, in my opinion. So in a sense, there is still that potential for trading. But with all these headwinds, you might not only look to have a long-term bullish sentiment, but in short term, you might have both like bearish sentiment or bullish sentiment along the way. And that's how DLC can come into play, because you can actually do both long and short on the market through the DLC instrument itself, also to hedge your positions. Okay, so there's a provincial government hidden debt. So basically, the central government debt is only 20% of the GDP, but the local government debts, which is all the provincial, all the different state government debts, might actually estimate to be 38.75 trillion yuan, which is a lot larger than the 20% of the GDP for the central government debt, right? And then a lot of these local government, these companies, right, they're actually facing a lot of issues in raising funds, because they have a very have a declining in revenue due to the different or difficulty to sell land in some sense, and there are some caps on them from the central government on what we can do to then source for funds, like alternative sourcing of funds through the other mediums. They are actually restricted, right? So these companies might find issues, and then the most of them are actually concentrated with this LGFVs that are actually with commercial property, like the hybrid ones. So they not only have the normal typical SOE type of holdings, which is a state-owned enterprise style of holdings, which they operate and then they sell certain uh rights or these tenders away, but also some of these hybrid ones actually have their own commercial property that they are renting out, that they are trying to earn profit from in terms of business revenue. So all these are the ones that are impacted due to the fact of the different or the weak condition of economic for some of the states. And with all these issues, then they might have potential issue with the bond repayment, which then leads to a default in the bonds itself. Okay. So also there's also regulatory uncertainty. So I think previously a lot of investors might be aware that there were some new regulation that they tried to implement for the gaming sector. Of course, it was very quickly reversed, and then right now, instead of having this regulation, they are now very supportive of new game publishing. All right, so this is the thing, the headwinds that it might be facing. So right now, the current state is still bullish, because they are now more supportive of issuing new games. So companies like NetEase, like Tencent, they are benefiting from this current policy. But the uncertainty part is that there were already plans for certain limitation or restrictions previously. So upcoming, after there is a general recovery of the whole economy per se, there might be also that that decrease or impact that might be coming into play if, let's say, the online games have another regulatory another regulation announced on the gaming itself. Okay, so I think clarity in terms of the government intention will then help these companies or this gaming sector or even the tech sector as a whole a lot in terms of the performance and then more confidence by the investors lah, because they don't want to investors flow the funds in and then directly there's a new regulation or new law announced on this sector itself. Okay, so also below I also showcase the top counters that there is in the Hong Kong Hang Seng Tech Index. So you can see a lot of them are in the technological sector, right? Some of them are even also in those related to the gaming side. And you can see only one is under consumer discretionary, which is the Li Auto. I think you can see that people are maybe aware of the EV market. So this is also showing how strong the EV representation is to the index itself, so called overall for the Hong Kong and Hang Seng market. Okay, so this is a chart where they show different impact of the Federal Reserve raising rates and then the impact on how the stock market is moving for the Hong Kong market. So in general, you see that actually before 2019, most of the time as the rate rises, the market rises as a whole. Right, so it's contrary to what people might think. Increased interest rate, then there might be a drop in terms of the performance of the market, but not really true. Sometimes you see that as you increase the interest rate, somehow the stock market is increasing. Right, there's a delay in the impact of the high interest rate that's leading to the potential this decline in the stock market itself. Right, so generally the interest rate is rising because the economy is doing well, and that's why you can see that this correlation is that interest rate, as the interest rate go up, the stock market seems to be going up as well. All right. So the issue is that there is this decoupling in 2019, where instead of them having increased interest rate or decrease itself, right? You see that as interest rate rises, the market is declining in Hong Kong side. Right. So it actually a few reasons. One is Hong Kong is pegged to the US dollar, Hong Kong dollar itself. And Hong Kong dollar being a very export-oriented economy, as a US market, sometimes they get a bit more strong, right? They might have issues with the export strength itself for Hong Kong. Also, another thing is that even though the US market was doing well, the Chinese economy was on the downtrend. And 77% of the Hong Kong exchange now, the market cap, have business running in China itself currently. So that's why it became a bit more aligned with the Chinese market movement as compared to only moving with the Fed itself. So why we mention this is because we do know upcoming the US will have the rate cut, right? And then what's the impact to China and Hong Kong? So in general, the rate cut itself is a the rate itself is a risk-free rate for the US T-bills. So when there is this risk-free rate, it means that there's a lower yield if the rate is declining. And with this lower yield, then fixed income will be less attractive. And then thus, if it is less attractive, more of the fund flow will be going into stock market for looking for a better yield. So it might flow into the US stock market, it might flow into the Singapore stock market, it might flow into the Hong Kong stock market itself. Then also you have a lower discount rate if you use the valuation models like DCF, discounted cash flow, and then thus the company valuation will then rise in a sense if, let's say, there's a lower discount rate in calculation. Then there's also the USD being less attractive compared to the non-USD currency. So people might want to move their funds into the non-USD currency, and that is as a whole, as they move into the non-USD currency, like example, Sing dollar, yuan, or yen, they also will look to invest these currencies, but they won't just convert and then hold onto the currency without any investment made. So the fund flow, in a sense, will then combine with the effect. Right, so also if the US have cut their rates, right, the PBOC have the more ammunition or more potential to lower rates further on their end to support the economy if required. So this does give more leeway to the PBOC to support the Chinese economy as a whole. Okay. Okay, so now we do have many DLC tracking the Hong Kong market. So as we look at the Singapore listing itself, right? So we're going to trade Hong Kong instead of doing directly into the Hong Kong market through the Hong Kong or through the stock connect to go into China, right? Singapore also have a different instruments like DLCs to track or to trade the very volatile or the very fast moving Hong Kong market. Right, so as you can see, most of the volume involve the Hang Seng Index as well as the Hang Seng Tech Index. Of course, there's other individual stocks that might be popular, like Baidu, Alibaba, Meituan in recent times, or even some Singapore names of DBS, ThaiBev, and Zhejiang are also popular DLC names. But you can see most of the volume concentrate around the Hong Kong market itself for DLC because there is the multiplier effect of 5 times, 7 times for index or 5 times for stocks, DLCs, but also because the movement will then give investors the opportunity to tap on short-term movement to potentially gain, right? So if you not only believe for long, there's also the short for the DLC itself. Okay, so you see Hang Seng Tech Index, right? There's many different DLCs, like as shown on right hand side. You can see this listing. Actually, these screenshots are all from the SocGen website. All right, you can see the movement of the underlying stock, underlying index in this case, and then also the movement of the DLC. Then you can also see the other related DLCs that tracking the same index on the right hand side. Okay, so basically, Hang Seng Tech Index, basically, like you said, is tracking on the performance of tech companies. So as you see, right now, the performance, there was a rebound in short term in the past 1 month. And you can see that the rebound is very significant on the bottom left. When there is an underlying movement of 7%, there is for 1 week basis, the product or the DLC itself actually rose 61%. So if you use multiplier of 7 times, actually 7% times 7 is 49%, but it's slightly more at 61%. So this is basically going to be on the compounding effect of a DLC. As a general uptrend, this increase in momentum will actually have a compounding effect to lead to a larger than underlying increase. This portion I'll leave more to Marcus to explain later, as he explains how the DLC will work. Basically, the DLC do benefit, or there's also some risk involved, but they do benefit from this compounding effect if the general movement is consistent on the uptrend or consistently on a downtrend if you are shorting. Okay. Okay, so then same thing, similarly to the Hong Kong Hang Seng Index, the Hang Seng Index 1 instead. So the overall on the right hand side, there is the DLC offerings. The left hand side is the same thing chart. On the top is the DLC chart. The middle is the Hang Seng Index chart itself. And then you have the performance on the bottom left. Okay. So on the right hand side, also just to showcase is that not only do you see the volume, you can also see the different counters, and importantly, you need to see the sensitivity, which is how much the index will move for this DLC to move 1 bit. Right, so at least you know how much movement is required. So the more sensitive, the easier it is for you to trade, because then you can then get the marginal portion of the gain. If let's say the movement is like a few 100 points, right? You don't want to, let's say, need example the first one on the top on the right hand side the chart. The first one is CYJW. You need 77 points to move 1 bit of the DLC, which is a very large amount. Right, so in that case, if the Hang Seng Index only move 100 points, you only move 1 bit for this DLC. But if you compare to the one I highlighted, the RQGW is 8.2. So 100-point movement of the underlying index will then move this DLC by more than 10 bits. Okay, so that's how you can read this particular table on the right-hand side. Okay, then we also have the individual companies, which actually I showed listed those that is not only that is higher volume, but also personally, I believe there is some potential to trade, all right, or some potential to look at in terms of performance. So first is the Baidu, right? So there is a very flat performance of Baidu currently due to their operating costs, right? So the current performance is not that, might not be as rosy, the current performance in terms of the profit and the revenue numbers. And then there's also some concerns on the company due to the links that people are saying that they might have to the Chinese government, all right? And then also there is a tapping on but the benefit is that we're looking at the potential part that they are tapping on this AI generative market, all right? So there's a very strong potential for growth itself as well. Okay. Let me plug the power in. Okay, sorry. So, in terms of Baidu, I think in terms of their, because right now in the globally, there is a very strong interest in the generative AI market. So Baidu has actually one of the models, leading models in China. So they are actually receiving a lot of fund flow or interest in that aspect, and they also have their own cloud solutions. So as a whole, in terms of their overall performance, I think it is going to be able to benefit from this generative AI interest or market fund flow into the sector. Okay. Next one we do have Meituan, right? So Meituan itself, there is a rebound already currently. Year to date is around flat basis, all right? So in terms of their food delivery system and their food delivery performance, right? So they are actually impacted by macro economic pressures and extreme weather condition. This is mentioned by their leader, right? The CEO, right? However, there's also change in the consumption power, consumption demand, all right, and then it causes this impact on their potential to grow in the future. So this is also impacting the Meituan recovery play, as well as they have certain other competitive. It's very competitive in this area right now. In terms, let's say the economy is not doing that well, there might be less people looking to buy from food delivery systems. All right, in terms or the amount of food delivery that they will demand for will lower in value. Okay. So as a whole, Meituan might not be as bullish. All right. So there might be some bearish movement on momentum in the short term. So even though there's a general recovery in the tech market, right? So then certain segments of this tech industry will see more volatile up and down periods. And then DLC will then have the opportunity to then have a short or long, so you can tap on both cycles. If you're looking at the fact that if you anticipate the earnings result is going to be bearish for this counter, then the short option might be available. But in terms of a long term, I think Meituan still have a due to the current valuation point, all right, they still have potential for recovery back up to above 100. In terms if they can continue to capitalize on their overall channel or market size, because they have a lot of links to the different consumers. So there's different ways to capitalize or to monetize their network. So Meituan still have that potential for growth in the long term. And especially if the China market as a whole is going to be recovering with the support of the Chinese government. So they also have they're also among the different social media apps that offer lending as part of the risk to the hidden debt of the population. So this part also might be a concern, because even though they might be profiting from this model right now, there might be different regulation coming in to stem this hidden debt issue of China. So they might be slightly impacted in that particular segment, and that segment will have a regulatory impact coming into play. Right, so Alibaba, so one of the largest firm, I think most investors will definitely know this company. All right, so they have also rebounded off the lows, all right, of 58, around 58 level, right now it's 70 plus. Right, so I think in terms of performance, I think everyone knows that it's for e-commerce, they have cloud computing, they have different segments, they even have end financial. All right, so there's easing regulatory impact, but it's looking to the fact that they might be having to spin off certain of their assets. All right, so in terms of long-term growth, they are very in a very high cutthroat environment for the e-commerce sector. However, I believe that the overall Alibaba have a very strong potential to grow for the short term due to the current valuation is still below 80. The valuation PE ratio, their in terms of market share, in terms of their cash flow that they have, still bodes very well for the performance of Alibaba. All right, and a recovering macroeconomic environment is still there, and then they will definitely still gain from the cloud segment. And let's say even if the government requires them to do any spin-off, that spin-off will also generate certain beneficial interest to the stakeholders or the shareholders for the short term. All right. After the whole spin-off, if let's say required, and let's say they do have a spin-off intended or regulated for them, Then thereafter, we need to review whether or not Alibaba, the remaining Alibaba, is a sustainable investment. But currently, as of right now, based on their overall portfolio, I think Alibaba is one of my personal preference in terms of interest or invest into the Chinese market. Okay. So the risk tension also still there for the Chinese and US-China tension. I think, and also in the cloud computing, same as Baidu and Alibaba, those that are in cloud computing, in AI, in generative AI, or in terms of the data centers, they always have a risk in play if the US market wishes to continue to have stronger sanctions or stronger regulations on them. So that part is also to be taking note of as a concern factor. Okay, so I repeat as well, there is this SocGen promotion that we do have, and I'll pass the time to Marcus to share more on how the DLC will work.
Hey, thank you, Huan Zi. I hope you can hear me clearly, everyone. Oh, good. Yep, this is Marcus here from Societe Generale. Thank you. Thank you for taking the time to join us for this lunchtime webinar. We're very happy to collaborate with Poems Phillips together with SocGen to do this webinar on the Hong Kong market as well as on our DLCs. So Societe Generale, we are a French bank and we're known to do structured products. So we are the issuer of this daily leverage certificates that are listed on SGX securities market. We launched it back in 2017 and we have grown leaps and bounds since then, expanded the range to over 200 DLCs that are listed on SGX. So the DLCs are a tactical instrument as part of your portfolio for you to, it's a leverage short-term trading instrument that you can use as part of your portfolio to navigate the volatile markets. All right, so this is definitely not a buy and hold instrument. And it's more trading in nature rather than an investment and buy and hold. So please take note of that. This is a short-term tactical trading instrument that you can use to complement your overall portfolio. And given the volatility that we've seen in the Hong Kong market in recent years, I think it definitely pays to have a long short or a tactical instrument as part of your portfolio to navigate all that volatility. All right, in today's very short half an hour session, I really want to go through the basics of DLCs, why you should consider the DLCs to trade Hong Kong stocks, and also give you a tour of our website, dlc.socgen.com, where you can find more information about it. All right, so let me share my screen first on our website. So from our website, you can see that we have, I hope you can see my website, all right. So this is our website, dlc.socgen.com. Okay, so this is our website and you can find out a lot of information about this, the full list of DLCs that we have listed on SGX, as well as educational information and market insights for your trading journey. All right, so under our education tab, you can find all about the DLCs. What are the DLCs? How are they different from other leverage products? And how can I trade the DLCs? All in this page. All right, so for those who are first time hearing of the word DLC, it stands for Daily Leverage Certificate. As I mentioned, this is a short-term leverage trading instrument that you can use to trade both long and short directions. So there are two types of DLC, a long DLC and a short DLC. All right, and they are all linked to an underlying asset, whether it's an equity index or a single stock. All right, so you can use this DLC to gain leverage on an underlying index or an underlying single stock for both long and short directions, right? We have a long DLC where the value of the DLC will gain in value, will rise as the underlying rises. And there's a short DLC as well, where the value of the short DLC will rise if the underlying falls. All right, so whatever it is, you always initiate your position with a buy trade. You either buy the long DLC or you buy the short DLC, depending on whether you want to take a long exposure or a short exposure. All right, so there are two types of DLC, long DLC and short DLC. Please do not go and short sell anything, short sell the long DLC to gain a short exposure. Please do not do that, as you might end up in the buying market and we as an issuer might have to come and rescue you. So please just remember, if you are bullish on the underlying stock, buy the long DLC. If you are bearish on the underlying stock, you buy the short DLC. All right, so two types of DLC, and there is a leverage factor, a fixed leverage factor for each DLC. It can be 3 times, 5 times, or 7 times. All right, for the index DLC, we generally have 5 times and 7 times leverage for both long and short directions. For the stock DLCs, for DLCs that track stocks, whether it's Singapore stock or Hong Kong stock, we have it all at 5 times leverage. And how does DLC work, right? So DLC, you have that fixed leverage factor of 3 times, 5 times, or 7 times. So the performance of the DLC is a pretty simple linear performance in line with the underlying daily percentage performance. So the DLC daily percentage performance is equals to the underlying assets daily percentage performance times by the leverage factor. So if for example, DBS rises by 1% today, my long DBS DLC, my 5 times long DBS DLC will increase by 5%. The value of the DLC will gain by 5%, while the 5 times short DLC would decline by 5%. And vice versa, if DBS was instead today fell by 1%, your 5 times short DBS DLC would gain in value by 5%, but your 5 times long DBS DLC would decline in value by 5%. So this happens every day on a close-to-close basis. Every day you get 5 times the performance of the underlying stock or underlying index daily percentage performance. All right, so that's more linear. So that's why we think that the DLCs is a much simpler instrument than, let's say, your option type products like options or your shorted warrants, right? For example, where it's based on options. For the DLCs, there's no optionality impact. So it's not like an option, it's not like a warrant. There is no in the money, out the money, at the money. There is no time decay, there's no implied volatility. All right, so this is definitely not a warrant or an option. The DLCs are more linear in terms of its performance. And you can say that the most similar payoff or exactly the same kind of payoff would be the leverage and inverse ETFs. So I'm sure every one of you have traded the TQQQ before. So in the US, they have the ProShares Ultra leverage and inverse ETFs on the NASDAQ, TQQQ, SQQQ. Pretty sure quite a lot of you in this audience here have traded before. Well, the DLCs have exactly the same payoff as the TQQQ or SQQQ. Every day you get that fixed leverage factor of the underlying daily percentage performance. But just that for the DLCs, compared to an LNI ETF, is the DLCs we can go up to 5 times or 7 times leverage, whereas for most leverage and inverse ETFs, it's usually capped at 2 times or 3 times leverage. All right. So this DLCs and also it's a certificate structure and not a fund structure like the leverage and inverse ETFs. But otherwise, the payoff is exactly the same as your TQQQ and SQQQ. All right, the same kind of fixed leverage payoff. And I'm sure many of you also you might not know is that we have a TQQW. So that's our 7 times long NASDAQ DLC. So we try to mimic that of the those that are in the US where the TQQQ, we have the TQQW. The stock code is TQQW. So look it up in your opponent's trading platform, TQQW. So we do have this this long and short DLCs with that fixed leverage factor every day. So the payoff is pretty simple for investors to understand. So I don't have to go too much about it. For the DLCs, it all listed on SGX Securities Market. So it trades during SGX market hours, 9 a.m. to 5 p.m. For the Hong Kong underlyings, we will quote when the Hong Kong market is open from 9:30 a.m. to 4 p.m. And the counter itself, you can tell a lot from the counter name itself. So this over here in this screenshot here is an example of a 10-cent DLC that we had before. So all the DLCs will start with the underlying as the start of the name. So this one is a 10-cent DLC, followed by 5 times, which is the leverage factor. And then whether it's a long DLC or a short DLC, so you have a long or a short there, followed by SG. SG stands for Societe Generale. We are the issuer of these DLCs. And lastly, the expiry date in year month date format at the end. And all the DLCs come with a 4-character stock code. This DLC was DANW. So if you look up DANW, you look up the 4-character stock code in your opponent's platform, you will be able to retrieve that particular DLC. So we are the issuer of these DLCs. We're listed on SGX, and we do provide market making on this, provide liquidity on this DLCs on all our 200 DLCs during the SGX market hours. All right. So we are the issuer as well as the designated market maker, where we are obliged by the exchange to provide continuous quotes on the DLCs, buy and sell on both bid and ask volumes for investors to buy and sell the DLCs throughout the trading day. So a common misconception is that people will say, oh, there's no turnover on these DLCs. So we have over 200 DLCs and not all of them are actively traded. So, but it doesn't mean that you can't trade the DLC that has no turnover today. So if the DLC is not traded today, it doesn't mean that you can't go in and buy and sell, because for SocGen, the moment the market is open, we will provide that bid and ask volumes over there and prices for you to buy and sell the DLCs. All right. So that is something that we are obligated as a market maker for this product. Okay. So these DLCs, the main feature of these DLCs is that fixed leverage factor. All right. So every day you get that 5 times or 7 times of the underlying assets daily percentage performance on a close-to-close basis. But due to this fixed leverage, there's also this feature that is very unique to the DLC, which is the compounding effect. All right, similar to leverage and inverse ETFs and any product that has a fixed leverage factor, there is this compounding effect that Huan Zi mentioned just now that can work for you or against you. All right, so the compounding effect can work for you in a nice trending market, but it might not work so well for you in a volatile or sideways market. So let's look at some examples over here. So for example, in a nice uptrend market, right? So in this table on the left here in this screenshot, Hang Seng Index rose by 2% for 3 consecutive days, for a total of 6.12% gain over the 3 trading days. The 5 times long Hang Seng Index DLC gained by 10% every day, right? So every day you get that 5 times performance. Day 1 you get 10%, day 2 another 10%, and day 3 another 10%. But overall, over the 3 trading days, your overall gain on the 5 times long DLC will be 33.2%. So 6% times by 5 is 30%, right? So where did the extra 3% come from? That is due to the compounding effect. Your gains are compounded daily, but also note that your losses are also locked in every day. So your gains and losses are locked in every day. You can see over here on day 2, the 10% is based off a higher base of $2.75. Day 3, the 10% gain is based off a higher base of $3.03. So every day your gains are compounded in a nice trending market. So the compounding effect can work for you very well in a nice trending market. All right, but let's look at the flip side of the coin. All right, in a volatile market, that's where the compounding effect might not work so well for you. In the table on the left here, in this example, you can see that Hang Seng Index was down by -3% on day 1. On day 2, it's down by -4%, and then it rebounded on day 3, +9% to 1.5%. 1.5% gain over the 3 trading days. The 5 times long DLC, every day will give you that 5 times performance. So day 1, it's -15%. Day 2 is -20% because underlying index is down by -4%. And day 3 is up by 45% because the underlying index is up by 9%. So overall, the gain over the 3 trading days is -1.2%. Because like I mentioned, the compounding effect where your gains and losses are locked in every day. So your losses on the first 2 days are already locked in. And the rebound on the third day, the plus 45%, is based off a lower base of $1.70. So therefore, even though the underlying index gained by 1.5% over the 3 trading days, your 5 times long Hang Seng Index DLC actually came up with a loss of -1.2%. All right, so that's the compounding effect. It is good for you in a nice trending market, if you can manage to capture a nice trend, but it works against you in a volatile or sideways market. So compounding effect is the number 1 most important feature that you should understand when trading leverage and inverse products like the DLCs or leverage and inverse ETFs, because of this compounding effect. And that's also one of the reasons why the DLCs are a short-term trading instrument. Over the long term, markets don't move in one direction or one direction up or one direction down. Over the longer term, that markets tend to mean revert. All right, it always go up, but it always comes down. It goes down, but it always comes up. So there's always becomes more like a sideways market in the longer term as you look at the longer periods of time. All right, so that's why the compounding effect will work against you, especially if the longer you hold the DLCs. All right, so generally we recommend that the DLCs are for short-term trading. So either your intraday trading, you trade it intraday, you trade it for a few days or a few weeks for a swing trade, or you can use it for a few days or a few weeks for your hedging purposes using the short DLCs. All right, so no matter what, it's always a few intraday, a few days, or a few weeks. Please do not buy and hold the DLCs for months at end or even a year, because the compounding effect will really work against you in that case. All right, so that's the number 1 most important feature where actually I have to stress that before you trade the DLCs, do look up our website here on the compounding effect for more illustrations. Okay, so please understand that before you trade the DLCs. All right, so you can find out more information about the DLCs here. Today I don't have that much time, so I'll just touch on the basics of DLC, the fixed leverage factor, the compounding effect, which you should understand before you trade the DLCs. For the others, I will leave it to you to come to our website here under the education tab to read more about the DLCs. You can also check out our videos on the DLCs over here. How do DLCs work? How do you trade the DLCs? How do you select the right DLC for your target exposure? So this one has our top video, number 1 video, 22,000 views. So please look up our videos over here to understand more about how do you trade the DLCs, both from a theory perspective as well as a practical perspective. All right. So how do you calculate your profit and loss? How do you trade the US index DLCs, which we launched quite recently? So these are some of the videos that you can look out for and understand more about the DLCs before you embark on your DLC trading journey. Okay. So I mentioned that we do have over 200 DLCs. You can find them on our products page under search. So under products, you go to search. You can find the full list of our DLCs. Sorry, my Wi-Fi is lagging a bit, as you can see over here. But luckily I open a few screens first. So you can see our under products, under search, you can see our full list of DLCs over here. You can search for under the underlying tab drop down, you can search for the index. So we do have a wide range of index, Singapore indices, Hong Kong indices, US indices as well. We have the Hang Seng Tech Index DLC, which is actually our star product. It was the most actively traded underlying last year on our DLCs, the Hang Seng Tech 5 times and 7 times DLCs. So over here, we do have all the full list of 5 times and 7 times long and short DLCs. You can filter over here, followed by you can filter even more for the long or short DLCs, whether you want 5 times or 7 times leverage, and then you get that list over there. Okay, so that's where you can find the list of our DLCs over here under products search. Okay, so we mentioned just now that Huan Zi mentioned something about sensitivity over there, right? So that's quite key. It's a very key aspect of the DLCs when choosing the right DLC for your target exposure. You can watch that video as well to learn more about that. But essentially, sensitivity, it means how much of the underlying has to move, how much of the underlying has to move before the DLC moves by 1 tick. So the DLC is priced at a different price range. They are generally priced between 20 cents to $2. Some at 20 cents, 50 cents, $1 level, etc. And all at different price ranges, they do have different sensitivity. All right. So over here, you can see that for the Hang Seng Index 7 times long DLC, the Hong Kong the red star indicator, UQTW, that is the most sensitive DLC. All right. So under the sensitivity column on the right over here, the lower the number, the better. All right. So for UQTW, you can see that the sensitivity is 1.813, which means that for every 1.813 points move on Hang Seng Tech Index, this UQTW 7 times long DLC will move by 1 tick, which is 0.005. Okay, so that's at a $1 to $2 price range, or 20 cents to $2 price range. 1 tick is equivalent to half a cent. All right, so when Hang Seng Index move by 1.813 points, this UQTW will move by 1 tick, which is half a cent. Okay, so it will rise by 1 tick, half a cent. So if you're in doubt as to which DLC to choose, we have highlighted over here the most sensitive DLC for each underlying and each direction and each leverage factor for you to choose from. So in this case here, UQTW, you can see there's a red star indicator. That is the most sensitive DLC. So most sensitivity is quite important for those who are, probably very important for those who are intraday traders, because you want the widest amount of tick range that you can have, so you can get in and out of your positions easily. So you want the largest number of tick range for intraday traders. All right, but for those who are swing traders, position traders, you're holding it for a few days or a few weeks, well, you might not be so particular about the sensitivity of the DLCs, because all of these 6 DLCs on the Hang Seng Tech Index 7 times long, they're all 7 times long DLCs on the Hang Seng Tech Index. They all will provide you with that 7 times movement on the underlying index daily percentage performance. All of them will gain by 7% if the underlying index gains by 1%, right? Just that there are different price ranges, so the sensitivity is different. But on a percentage-wise basis, they will all move by the same 7 times leverage on the underlying index daily percentage performance. Okay, so if you're a swing trader, you don't mind, you don't need to be too sensitive. Well, you can still choose, the ILKW, which is at 30 cents level, or you can choose the CYSW at the 17 cents level. Although they require a larger amount of index moves, 7 index points or almost 3 index points for it to move 1 tick, but it will still give you that 7 times performance on a percentage basis. All right, so there's a small number of ticks there, because 1 tick at the 30 cents level or 1 tick at the 17 cents level is a larger percentage, as opposed to 1 tick at the $1.40 level, where it's a small percentage. So for the same amount of percentage, 5% move on the DLC, for example, this UQTW will move by 5 ticks, but the CYSW or ILKW might move by 2 ticks or 3 ticks. But on a percentage basis, they are all 7%. Okay, so in doubt, always try and use the most sensitive DLC to express your view on the underlying. You can look for the red star indicator over there if you are in doubt. Okay, so that is the basics on the DLC, on the sensitivity. Of course, there are 2 other factors that you will also learn of if you watch our video on how to select the right DLC for a target exposure, which is outstanding quantity. So outstanding quantity refers to how much of the DLC units have been sold into the market. All right, so we will issue a finite number of DLC units at the point of issuance. So if we do sell out everything to all the investors, this percentage over here will be at 100%. When it's at 100%, which means that we will not be able to sell anymore, you will find that we will not put up any more ask prices or volumes. We will only have the bid prices and volumes for investors to sell back to us. All right. So try and choose those DLCs that are not close to 100%, preferably those below 50% or 60%. You should be safe, in case you want to buy more after that. So try not to choose those DLCs that are close to 100% outstanding quantity, which means that they are mostly sold out. All right. So sensitivity, outstanding quantity, but also look at the expiry date. Although the expiry date does not have an impact on the price of the DLC, so whether is it like expiring tomorrow or whether is it expiring 1 year later, the DLC payoff is not affected. All right, you still move every day that 7 times movement of the underlying index, daily percentage performance. But of course, you don't want to choose a DLC that is too close to expiry in case you want to have enough expiring tomorrow or the next day, because if your investment or if your trading horizon is 1 week or 2 weeks or 3 weeks. All right, so do not look out for the expiry dates. Try not to choose those that are too close to expiry. All right, so that's some of the basics on how to choose the DLCs to target to express your views. All right, we do have quite a lot of like say the same 7 times long DLC on the Hang Seng Tech Index, but at different price ranges. So I guess I understand it can be quite confusing. The difference mainly is just that they have different price ranges and they have different sensitivity. So if you are in doubt, please just look at the rate star indicator on the left to choose the most sensitive DLC, and I think you can't go wrong on that to express your view on the underlying index or underlying stock. Okay, so I mentioned just now also the fixed leverage. So this is an example of the CapitaLand investment DLC 5 times long DLC on the CapitaLand investment. Okay, so this is an example of the individual terms page. You can go take into each DLC, and then you will see the individual terms over here, including what's the leverage factor, what's the last intrinsic close value, which is what published every day after the market close, what's the different expiry date, last trading date, etc. all here. And this is where you can see the 5 times performance. If CapitaLand is up by 3%, right? So the DLC is up close to about 14-15% based on the previous day intrinsic close. Okay, so you can find all the list of products on our search page over here. You have different tools to find out what are the newly launched DLCs, what are the expired DLCs. Our education tab on the DLCs to learn more about the DLCs, including our videos. Again, please support. Have a look at our DLCs videos, especially this, how to select the right DLC for your target exposure. This one, I'm sure you'll benefit all of you who are trading the DLCs. As well as the last tab over here to find out more insights about the DLCs. What are people buying? What are people selling on the DLCs? What are the top 10 underlyings? So the underlyings itself, today NetEase is one of the top gainers. What's the percentage performance? And then how is the volumes also rising in tandem with the price gain? Today NetEase turnover gained 13.61% versus the previous day. And you can see over here the top 10 gainers, top 10 losers, top 10 turnover change on the underlying stock, as well as the DLC long-short ratio over here. What are people buying and people selling? Okay, under our Markets Insight tab over here. Of course, the most important information would be our hotline number over here at the top right-hand corner, 62262828. So please do feel free to give us a call on our hotline over here anytime during the SGX market hours, and my team and I will be happy to answer any questions that you have on the DLCs. So this is most important feature about our website because it gives you that number to call us. All right, and also do subscribe for our newsletter. So our DLC newsletter can be found over here. So this DLC newsletter can be found over here, and you can subscribe for our newsletter, SocGen DLC newsletter over here. It's a weekly newsletter, so rest assured we will not spam you. All right. So the last point that I wanted to go through before we go into a bit of a Q&A, so please feel free to put any questions you have into the Q&A or in the chat box. We'll be happy to answer them. The last point I wanted to leave you guys with is, why should you choose the DLCs to trade the Hong Kong underlyings? Well, you've learned a bit about the DLCs, what you can do. So definitely leverage is one key selling point in terms of why you should consider using the DLCs to trade Hong Kong stocks. It gives you that 5 times leverage on the index, on the single stocks, Alibaba, Tencent, Meituan. All of them are there. Baidu, as what Huan Zi mentioned, highlighted as well, Meituan, all this, they have their earnings season coming up. So you can take a short-term position on them to have on this earnings play. So we do have a long list of DLCs, wide range of Hong Kong stocks for you to choose from. And this have both long and short directions. So you can take a leverage position on this Meituan stock or Hong Kong stocks, and then for both long and short directions. And they are all traded on the SGX securities market. All right, they're all traded on the SGX securities market, which means that they are traded in Singapore dollars. So you don't have to go through the hassle of having to change your money to Hong Kong dollars and buy the stocks itself on the exchange. So I'm sure you appreciate that convenience and the comfort and familiarity of trading on the SGX market. So you can trade it on the DLCs on the SGX securities market, but have that exposure to the Hong Kong stocks or Hong Kong stock index. All right. And also, I think the most important is, to trade Hong Kong stocks in the Hong Kong market, it's not particularly cheap. I mean, it's the minimum investment sum. For example, I remember BYD just a while back. The minimum investment sum to gain exposure to BYD is $25,000 Sing. So I mean, not many people have that kind of money to put one time into to buy the BYD stock at $25,000. All right. Even if you have the kind of money, you might not want to put everything in at one go. You might want to scale into your position. So definitely the DLCs, which can be traded for as little as $100 or a few $100s, because of the price is only at $1 and the minimum unit size is about 100. It's same as Singapore stocks, 100 ball lot units. You can trade the DLCs for as little as a few $100s. Of course, if you're taking into account your minimum commissions, etc. But it's more cost efficient for you to use the DLCs to trade the Hong Kong stock than as opposed to going to trade the Hong Kong stocks itself. All right, so you are able to gain exposure to the Hong Kong stocks at a fraction of the cost of actually buying the stock itself. So a lot of people tend to use our DLCs to trade the Hong Kong stocks because it's more cost efficient. You can save your capital, more efficient use of your capital as well. So they do use the DLCs to trade the Hong Kong stocks, especially if it is a short-term trading, short-term horizon. All right, if you're going to buy and hold like BYD stock for 1 year or for a few years, you believe in China growth story for the next few years, then please go and buy the stock itself. All right. But if you are looking at a short-term trade on the Hong Kong stocks for a few days, a few weeks, then it would definitely pay to have this instrument, this DLC instrument at hand to express your view. All right. And you can use both the long and short DLCs to express both sides of the directions, trade both sides of the directions of the market as well. Okay. So and also, when you trade on Hong Kong exchange itself, there are certain costs on the exchange fees as well. Well, these DLCs, you are trading on SGX, so there is no Hong Kong exchange fees that you have to pay. Okay, so these are the DLCs, some of the key selling points, or rather key reasons why investors are choosing to use the DLCs to trade the Hong Kong stocks instead of buying the Hong Kong stocks itself. Okay, but we do have a wide range of DLCs: Hong Kong stocks, Singapore stocks, Hong Kong index, Singapore indexes, and as well as the US indices. So please have a look through. Have a look at our search page under our products tab at the range of underlines that we have, and we hope that you will find them interesting and that you will find the stocks that you want in this list. But if not, please do feel free to give us a call or drop us a note under our contact us message box to give us any feedback on our DLCs, any kind of underlines that you want to see. Please do feel free to reach out to us. We'll be happy to consider and to look at launching DLCs on this particular underlines that you want. All right. So I'll leave. Last thing I want to share about. Sorry, I have to rush through today as it's quite a short session. I hope to give you guys a good flavor of what the DLCs are, why you should look at the DLCs when trading Hong Kong stocks, and also where can you find more information about the DLCs. The last thing I want to share about is the promotion that Huan Zi mentioned earlier. Well, so this one is a promotion that POEMS has kindly done up for our SocGen DLCs, where you can get $88 cash credit if you make two buy trades on our SocGen DLCs. All right, so you can find more information on their promotion page over here. And I mentioned just now, and also it is for new DLC traders, but not entirely new. So if you have traded a DLC before, if you've not traded a DLC in the last 6 months, but you traded it maybe like a year ago, then you still qualify for this DLC promotion. Okay, as long as you have not traded the DLC within the last 6 months or between 25th June to 24th January, you will still qualify for this promotion. All right, so please have a look at the promotion page on the POEMS website on the DLCs. and we hope that you'll be able to use this promotion to get kickstarted on your DLC trading journey. All right. So I'll leave this last few minutes of this session to Q&A. Please do feel free to put in your questions in the chat or in the Q&A box. Hope to answer them. If not, happy to always, like I said, do give us a call on our hotline 626-2828, and we're happy to rehash a bit more about what the DLCs are and answer any questions that you have on the DLCs. All right, thank you everyone. Let's see the chat or Q&A.
Thanks, Marcus.
Yep.
There's a question on the leverage multiplier on why they are capped at 7 times and 5 times. Maybe you want to touch on that?
Yeah. So I think definitely we can appeal to go higher. We can work with the SGX to go higher in terms of leverage. But I think we want to make sure that when it comes to leverage, we also want to have responsible leverage. Okay, responsible leverage in that sense. We believe that 5 times for single stocks is sufficient, especially for the Hong Kong underlines, which can be quite volatile. All right, they can move quite a big percentage, 4%, 5% move a day. Times by 5, that's 20% move already. So we want to also exercise a bit of prudence in terms of having responsible leverage. Index-wise, they're a bit less volatile, so we go up to 7 times leverage. But even at 7 times, your Hang Seng Tech Index, Hang Seng Tech Index or your Hang Seng that can move 3-5% in a day. That times by 7 is really like 30-40%. So I think that is a comfortable level for investors to use the DLCs to trade the markets in the short term. I think we will keep these levels for now. But of course, we'll always continuously review as whether we need to go higher, we need to go lower in terms of the leverage. All right. I see the question is, yes, why aren't there more DLCs offered for Singapore stocks? How about DLCs for US stocks? So good question. For Singapore stocks, we do have most of the STI constituent stocks, although there are a lot of REITs within the Singapore stock space. So we've tried REITs before. Not many people have taken up the REITs. I think maybe people who buy REITs are not in a trading mindset. There's always a buy and hold yield kind of play. So REITs is out of the picture, unless you tell me whether there is a lot of demand to trade it with 5 times leverage. But otherwise, we'll continue to look out for Singapore stocks to launch as well. But there are also some limitations in terms of the liquidity. Not all of them are very liquidity. So for us, SocGen, when you buy the long DLC, we will have to go to the underlying stock market to go and hedge on the stock itself. All right, to replicate that 5 times performance that we're giving to you. So if we can't find the liquidity on the underlying stock to hedge the position, then it'll be very difficult for us to give you that 5 times leverage. So we also look at the liquidity of the underlying stock, and unfortunately for Singapore stocks, there are just not that many stocks that are that liquid. But we continue to try, and please do drop us a feedback, anything, give us a call. If there are certain stocks that you want, please do let us know. We will definitely review whether we can do a DLC on that Singapore stock. For US stocks, we are also looking at it. Different time zone. So definitely there is going to be some similar to the US index DLCs, there's going to be some education needed as to how does the DLC track the underlying stock if it's different time zone. How do we quote during Asian hours? So that one we are definitely actively looking at it. But we'll keep you posted on whether we can do the US stocks. But once we do, be assured that Huan Zi and I will be back here doing another webinar to share more about this DLCs on US stocks and to help you understand how it works. The charts, you can find the charts on the underlines. We have a bit of I wouldn't say it's very advanced charts. You can find charts on the underlying stocks. We do provide them on our website under underlying asset. Okay, let me try and move around. Under charts, you can see over here. I hope you still can see my screen. You can search which index you want, or Alibaba. Then you have some basic indicators over here for you to see the price charts. Okay. What other question is there? There is. You want to answer the live stream?
Yeah, I think that is just on regarding the live running chart itself for the Hang Seng. Maybe you can just show the Hang Seng Tech chart over here. Maybe I think the index one they might be interested to see.
Sure. We don't have live streaming for Hong Kong underlying. Those are I would say very rare Hong Kong underlying live streaming. Maybe you can try investing.com. I'm not sure. But the license to do live streaming is always very, 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 very expensive for index providers. So definitely there isn't. But this chart here is live. Just that you need to click.
Yeah, just click the refresh button.
You need to click the refresh button. All right. Yeah. So all the data inside here for the underlying the DLCs is also live. Within the DLC space is live. You just need to click refresh. Okay.
Yeah. So I think the chart can both link. The chart itself also have the links below on the related DLC. Then from the related DLC, you can also click onto the chart itself. So it's a very really sophisticated website that's already prepared by SocGen team. So you can actually very easily refer to both the underlying and the DLC performance that you're interested in by that. If you're not too sure what to look at, all right, you can look also I will normally look at the top volume. You can also show roughly what is the more traded counter for the day, or what is the percentage movement counters lah. So those will be the underlying and also the DLC itself. So a lot of investors
try to look at the top value. All right. So I know people tend to like to look at volume, top volume. That's a very common Singapore thing. But top volume is not a good representation because for the DLCs, please do not go and trade those like 1 cent DLC or like a 5 cent DLC. So this is not a warrant, right? So I know a lot of people are quite used to warrant trading 1 cent warrants, 2 cent warrants, 3 cent warrants, but it does not make sense. All right. So the DLC will move 7 times that of the underlying daily percentage performance, and for the DLC to move 1 tick at the 1 cent level or the 2 cents level, it's almost like 100% gain. Divide by say 5 times leverage. Underlying stock has to move by 20% before your DLC even moves by 1 tick. All right. So that's also sensitivity. Right. So don't trade. Please do not trade those very low price DLCs. Try to aim for those higher price DLCs, those above 50 cents, for example, would be good. All right. So always try to look at also the top value. We go by top value is better indication of which are the most traded DLCs rather than volume, top volume. Okay. This is not a penny stock. All right. For the DLCs.
Yep. Okay, so I think that's about it for today. All right, so I thank Marcus again to join us today from SocGen to share with us more about the DLC, and I hope the sharing on the Hong Kong market itself might be insightful for you to look into your investment portfolio to try and see if you're going to hedge or do some trading on the Hong Kong market. So do note that it's not only about the trading on the leverage for a direction of long and short, but also you can use to hedge your existing position that you already have in Hong Kong market if you are worried of the earnings results having a negative impact. So you can actually short to cover the long position that you might have also in your own portfolio. So that's another way to use the DLC itself as well. All right. So
that's
thanks
correct.
everyone. And thanks, Marcus.
Thanks, Huan Zi. Thanks everyone for joining us. Take care. Bye-bye.